Hey, what's going on, everybody? This is TerrenceRe. We got a stock market, little analysis on the stock market this morning. We're going to talk about how the banks are pushing the market higher. Um, Pretty much what their earnings has been the catalyst for this move, and so we're gonna get right to it, and well, right after the buffer. So right now, this is shaping up to be, pretty much a pretty wild session or a volatile session so far. If you're looking at my watch list, now the market opened up. I think the S&P futures got up as much as I think they were up about 80 handles, maybe. I think right around 70 something handles. And right now they're back down to about 20. So if you look over here, you look at this candlestick right here today. If you're looking at it, you can see this long wick. It was all the way up to about what was the high, 37.77. And so you can see that the market has pushed back down. Now this is a daily candle, so let's go. It'll probably be easier to look at this, take all these indicators off, and just look at it on a 1 minute. And you can see now that's pretty, and you can see how the market opened up. And then now where we're at now, where it's pulling back, right? It's almost look like it's filling this gap from the opening over. Look like that may have been Monday or Sunday, right here. So we got a gap, and it just look like it's filling that gap. But that's neither here nor there. The main thing I wanted to talk about is what was the catalyst? What made that move like it did? It was banks. A lot of the banks had their earnings, and they had some good things to say during their earnings. I have something I wanted to read from Jamie Dimon, the CEO of JP Morgan. He said, "I think we're in an environment where it's kind of odd, which is very strong consumer spend. You see it in our numbers." He said, "You see it in other people's numbers, up 10% prior to last year, up 35% pre-COVID. Balance sheets are very good for consumers. Credit card borrowing is normalizing, not getting worse. You might see, and that's really good. So you go into recession, you've got a very strong consumer." So most of the analysts and a lot of CEOs of companies of the S&P 500 are forecasting a recession, and but it's kind of not showing in Americans like pocketbooks. For the most part, people still have a little bit of cash set aside, and a lot of that has to do with the stimulus packages and low interest rates for so many years, the appreciation of home price. So your homes have increased in value, and so people still have money. And so that's one of the things though that the Fed is really trying to fight. It's kind of a it's a you know, I don't want to sound harsh, but the thing the Fed is trying to do is literally trying to take money out of people's pockets. With in a That's a simple way of putting it, because they're raising interest rates and they want to see the job market change. Right now we have low unemployment, which they want to see rise. Because they want to try to crush inflation, but they can't crush inflation because the people are flush with cash. So people are still buying up goods and still traveling and things like that. So that's what we got going on in the market. So that's my fundamental spiel. Now let's get to the charts, and I'll show you. We can pull up JP Morgan. Look at that. Like this is a let's go to the daily. Let's take this off and just look at it. This is JP Morgan. I mean, it's ripping. You look at this big green candle. This is crazy. That's on October 13th. You know, that's what a low of 10. What's that? That's a low of 101.76 all the way up to 109. What is that? 109.90. So it's like a $9 move in one day. That's why you got that big green candle right there. And then the next day it gapped up and it's just running. And so these bank earnings, fueling the economy to go up. Excuse me, not the economy. Misspoke. The stock market. Let's not conflate. We don't want to say that both are. A lot of times when we look at the market, people will look at the stock market and kind of. I know Donald Trump did that a lot during his years. Um, President Joe Biden is trying to kind of like steer away from that, but the stock market is up. That doesn't necessarily mean the economy is doing well. So, but the banks are fueling the stock market. And so even if we look at, let's take a look at, we see Goldman. This is Goldman Sachs is up. Even though you can see it giving back some of the gains today, you can see it off of the low right here, gapping up. We got Citi. We got Citi doing the same thing. So pretty much Morgan Stanley. We got Bank of America. Look at Bank of America. I was watching CNBC, I think yesterday, and some of the analysts on there was picking Bank of America to be like the top bank to own out of the banks. I'm not saying that. I'm just saying, off of its high of $50, if you're calling this the low down here at $29 and now it's trading around 34, if you think that it can make it back to take these highs out, might not be a bad place to buy it if that's your game. Wells Fargo, pretty much the same thing. Right it down around 43.90 currently. High of $60. So you got if you're gonna buy low, this is where you're gonna buy low at. What are you waiting on if that's your game, right? I'm more of a trader and I try to be more strategic with my trades. And so this may not be a bad place to get long, maybe some put spreads, maybe some debit spreads or something like that, or maybe selling a put to get long stock or something. There are different strategies that you can use. I'm gonna come back to the S&P 500 futures, the /ES, and I want to look at something that I've been the past couple of days. I am in this. I do have a put spread on in my TastyWorks account. And basically, if you look at the 4 hour, and you can see now it's peeling back a little bit on the day. But you can see my Fibonacci's off of this high back here. It hit my sweet spot of 61.8 on that retracement, right? So then I got levels set up to where I want to take profit. It didn't quite hit that level. And so I'll sit through this. I did go, like I said, I have a put spread. So my first take profit level, if I want to get out, would be right here, right around 38.20. And I even have an alert at 38.15 for the platform to notify me. I get a vibration on my phone, let me know it's there, and I may close the spread then and take profit. Right? That's if it goes back up there, which I do think it will. I just think we have a little bit of a retracement. It'll pull back into here. I fully expect to get a move maybe later on the night or in the morning back up into here. Now, the next level is here. You have different levels here. I even have a level all the way up here to 45.72. Now, I'm not gonna hold it to there. I don't know if the market will even make it back there, right? I'm more than likely I'll take my put spread off once it hits right here at this 100%. And all the 100% is basically a AB equals CD harmonic pattern. Hit the like button, hit the subscribe button if you're watching, if you getting something out of this. I will go over harmonics. I probably will have to do that on TradingView where I can draw them out. But basically what a AB equals CD is the length of this up move. So basically from this low to this high will equal this low to this high. So from here to here is the same as from here to here, price wise. Those moves, so this would be your A, that would be your B, and then this would be B to C, and then C to D. And so you generally, and that's how I plot that out. And so I will be closing my put spread once it makes it back up to this level. If it does, there's no guarantee. It's a defined risk trade, so I'm comfortable with the risk, even if it doesn't make it, right? So guys, that's all I wanted to go over on this video. That particular move, I wanted to talk about, that the trade that I'm in. I'm in, and I actually have the trade in the S&P futures. You could do this trade also in the SPY or the SPX. I mean, most definitely you could put it on here. Um, One thing about it, doing it in the SPY is, it's stock related. So the S&P 500, the futures, they settle the cash just like the SPX, which really doesn't matter because I've never been assigned anyway. I have a certain time limit for holding my trades. So guys, with that, hit that like button, hit the subscribe. Hope you got something out of this. Let me know what you want to see. Let me know what stocks you're trading, what you think the market is going to do. And I'll respond to the comments. And I may even put on a trade, in a stock that you like. And with that, guys, I'm out. Peace.